Good morning guys, how are we all doing? So Dan from Trading with Dan here. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we will go straight over to those charts. So yeah, Bitcoin on the 4 hour, yeah, as expected really, we got rejected at this 11,000 area. So it hasn't been a strong rejection thus far, so that's clearly a good sign, and that is in the face of quite a big stock market sell-off we've had well, for the last half a day or so, basically post Powell speak. So yeah, you can see here, yeah, rejected. Obviously we know we're on this daily 9 now. So daily 9 at resistance. Yeah, obviously doesn't look out of place there at all, does it? Like you guys know, though, I'm potentially expecting maybe some sort of a pump up to the daily 200, sorry, the daily 100, yeah, the 200-day moving average. So yeah, be aware that could happen, but obviously we could just trade sideways to down from here, in all fairness, and it would look fine. But yeah, just be aware that you can get pumps up into these candles, even though they look like that's the trend done, because clearly there is going to be quite a nice liquidity hunt potential if we do break above here and try and tag that daily 200, just on the basis that lots of people will be shorting this level. They'll be shorting the daily 9. They'll be jumping in early on the trade. You guys kind of know how I trade the TD, is that once you get the 9 candle, then once you either break below that 9 candle, that's the sell, and then, or if you break above it, that's the buy. And you can either do it like on a just trading below during the next candle, or just when that candle closes above or below, if you want to be more conservative about it. So it can catch people out in that way, and that's why I have it that way, because it can basically catch people out, because yeah, you observe it enough times, you kind of see how it can work. So yeah, so yeah, I mean, this is it, guys. Realistically, we are gonna follow the stock market at the end of the day. Stock market is then getting driven by the dollar. You can see the S&P didn't have a good few last 4-hour candles, but seems to have found some sort of support with a bullish wick into basically back testing our trend line here. So yeah, this is as good a place as any to springboard off, and then if we don't, that'll clearly be a sign of weakness. And yeah, I mean, you can see on the daily, we came up and tagged the daily 21 and then got rejected from that. So yeah, we're getting squeezed basically by the daily 21 and obviously the 50 period here. So yeah, which is going to come out on top on there. The big problem we have potentially got going for us is this move up in the DXY, although it has been swiftly rejected from when I was looking at this morning at basically over 93.5, which was a pretty big move. Took us clear out of this trend line, but obviously met this horizontal level sort of here, and yeah, swiftly rejected. So yeah, like I said, since I last looked at this about not long ago, so if we look at this on, like, say, a 15-minute chart, we can probably observe what's happened. Since we looked at this, I think I looked at it earlier this morning, yeah, about 7ish, we were at yeah, we were basically at 93.5, and yeah, now we've subsequently come down that's quite a swift move down. So yeah, I was going to say this was looking potentially awful, but actually now it's maybe not looking as awful as it was looking. So yeah, are we just coming in for a back test of this trend line though? We could be, but like you guys know, I still think it's more likely we are just gonna trade down here and break back below it. But yeah, we'll have to keep an eye on this. We'll have to keep an eye. And the problem that we've got is the Fed has pretty much done everything monetary policy-wise it can, and the Fed is basically just desperate for Congress to pass the stimulus, the second stimulus bill or whatever, and then obviously the Fed is happy to fund that, but obviously the Congress has got to agree and pass it, and they can't because of just party politics. The thing is, I've been reading a number of articles. It is really bad. I mean, the American people should not be happy about what is going on, because basically the Fed the government did immediately come to the aid of stock markets, bond markets, big companies, everything, gave them everything so fast, to the point that a lot of these companies are basically trading their stock prices are ridiculously high again. But when it comes to the actual American people, they're not really that bothered about passing much or giving them much or doing anything. They don't really care about them, because they're not really the people in the government are rich people that have got interests and basically getting funded by other rich people, and they don't really care about the average person. So what has happened is that now, obviously, the stock market looking better, and just the outlook in their minds looking better, then there's no urgency for them to actually pass anything for the people. So they're not so bothered. If stock markets were crashing and things were looking awful, and these rich, powerful elites were losing money, then there would be more consensus to actually pass stimulus bills like there was initially when things were looking bad. But now they just don't care. The stock markets are fine. The elites are getting rich. The rich are getting richer. They don't care. I mean, stimulus can wait. Democrats just know if they get the stimulus bill passed before the election, it helps Trump. So they're not bothered. They're not bothered about it. They're not bothered. They'll just drag their heels. But yeah, and then obviously the Republicans can't really agree on how big it is going to be. So there's a big gap there. But I mean, if these stock markets keep looking weak, maybe they will. Maybe there'll be some sort of consensus. But yeah, we'll have to see. We'll have to see. But yeah, it's not ideal. It's not ideal. Wall Street has basically been bailed out, but Main Street, they just don't care about Main Street, and they never have done really, because they're only bailing out Wall Street with stolen money from Main Street anyway. When they keep rates low and dish out money, you basically, the normal person has to pay for everything through the inflation, which is a tax, higher price of everything they buy. Then also those rates keep being kept low are directly steal money from savers, from the middle class people that save, and just distribute that basically to the richer people that actually speculate in high risk assets that clearly don't do well when things go bad, and then they get bailed out with the people that didn't take the risk with their money. So yeah, it's not an ideal scenario, but hey, the dollar is the release valve for all this, which is why obviously the dollar is going to go down. Ultimately, even if it stabilizes or goes up, because of the actual inability of more dollar devaluing stimulus, because of the partisan politics that are obviously coming to a head at the moment with the elections. So yeah, that's kind of what is going on there. So yeah, I mean, realistically expect volatility here, but ultimately we all know what is going to happen, and it is going to come down. Well, we don't all know. Lots of people don't even think it at all. But hey, we will see what happens. Time will tell. So yeah, daily nine. We've got to obviously be aware of that. So let's have a look at those stochastics. How are they looking this morning? 4 hour is 4 hours coming down, having a little bit of a reset. 10 hour flattened off again. 12 hour looking to turn back down, and yeah, we know 12 hours the main one, guys. 12 hours the main one. So are we going to get jammed up here, or are we going to come down? This is one of the occasions when, like I was saying, I look more towards the daily and the 2-day to actually just keep the 12 hour up there, because these are clearly higher time frame, more powerful time frames, basically, just because they're lot bigger time frames. Simple as that. 3-day potentially turn up at some point, and 5 days potentially turn up, and that will eventually feed through to the weekly. But yeah, really these daily and 2-day I'm watching for trying and mute any downward pressure from the 12 hour. But remember, the 12 hour does call things pretty well, but if you look here, the 12 hour can still spend a lot of time up here before coming down. So yeah, that is it really. Today I think will be a big day for stock markets. How are we going to digest the current price action? Are we going to bounce up like we normally do? Is this just going to be, well, a lower low, low, higher low, higher, sorry, a higher low even, sorry, low, higher low, higher low, and then start to make a move up? Is that going to be the case, or are we going to be out for the count? I noticed a lot of people on FinTwit, financial Twitter, are particularly bearish, but they the people that I follow are basically finance professionals, and realistically they are always bearish. because of just what is going on. But they yeah, so there you go. Twitter is a good form of information, I find. If you follow the right people on Twitter, and then something's going on in the markets, you can always go over to Twitter, just click refresh, and then one of them or two of them or more of them will be telling you exactly what the markets are reacting to at that exact point in time. So if you if you can't afford the £2,000 or £3,000 a month for a Bloomberg terminal, you can get a Twitter. And there's actually some people on Twitter that I follow that basically do retweet a lot of the important Bloomberg terminal news points as they come in. So you can see a lot of those anyway. So yeah, there we go. Anyway, so remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys later on today.